Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Fresh Agenda, Everag's Global Insights team, and Steve. We're back, mixed it up a bit this week, talking about the pulse first, then some market updates, and also chart of the week, which is always best till last.
It's always riveting.
Yep.
Pulse gets us going because it kind of leads into the story about skim milk powder.
Yeah, and both powders weakened from last week's GDT results, Steve. Whole milk powder lost just $40 a tonne, about 1% on last week's GDT result, but it's back to just $5 a tonne down on the previous Pulse result. And for skim was weaker, down $70 a tonne on last week's auction, or 2.4%, but down $90 a tonne, or 3.1% on the prior Pulse event, Steve. So a little bit more weakness coming into play there for this week's Pulse. And I know that you've done a little bit of your nerdy work on the comparison of Pulse versus auction events, Steve.
It's research.
Take us through it.
Okay. This is a comparison of the direction Pulse takes versus prior auctions. And what we've seen in the past is Pulse tend to go against the grain a bit, be more a downer. So that ratio has come a bit closer. I know everyone will remember the last time I put this up was about a 70-30 split.
So 70 down.
70
Yeah.
down, 30 up in direction. So that's come back together, which means in the past 6 months the trend's been about even, up and down from the prior auction. So I don't know if it's interesting enough, but Pulse is a bit indicative of a direction. And when you get back to the chart, you'll see that it does give a bit of a sign, which is probably why things in Europe went soft. So the skim market in Europe continuing weaker. It's been doing this for a couple of weeks now, drifting weaker as the Asian demand story seemed to run aground. And Pulse layered on top of what were some things already playing into this story, but it was a bit of news that just sort of iced the cake or took the icing off the cake, if anything. So milk production is going up. We're expecting a supply response to strong milk prices, and that's building expectation there'll be a bit more product around. Skim milk concentrates got very cheap from Christmas, it usually does, so that's made it very economical to make skim milk powder and a bit more volume. But also cheese demand, Joe, is a bit under pressure, and we can see the fact that the fair value of cheese, we talked about this last week, the fair value of cheese in Europe is above where the actual trades are, and that tends to create the theory that more solids might get pushed to skim and butter. And so right now we're hearing that there are plenty of sellers and not a lot of rushing from buyers to deal with this, and we've got more product out of New Zealand, of course, on the world market. So it is probably going to be a feature that we'll see for a little while.
Yeah, and Steve, just looking across the different regions to compare what's going on with skim prices, the US is still way out in front, disconnected from what's going on in some of these other regions. But NZX futures still remain well ahead of the actual trades we're seeing on GDT, and that has been a feature of the futures for quite some time. The gap for GDT over the EU, well, it's not much of a one, Steve. It's pretty close there on these latest results from the last week.
In Q2, that firming of EEX in Q1, Q2, that'll be interesting to see if that eventuates.
Yeah.
Honestly, as always. So a bit of a look at butter. New Zealand butter futures flattened out after some of that short-term cover influence has gone away, and we certainly saw that in the GDT result where those short-term prices fell hard. So we've seen a paring back of prices down 5-7% in Q1. This is over the past week. So it's dead flat curve, really. So now it's all about whether demand is there to hold up that price at that level, because this is still fairly elevated relative to history.
Yeah, and again, this latest move in terms of butter prices in Europe has brought everything way closer. The window to the EU for New Zealand butter exporters is closed. There's really not a big enough gap there to encourage that import trade. And the US, while it's competitive on paper, there's probably not enough export grade butter to have a real influence in global markets. But, we're just seeing things converging there, Steve, heading into 2025. And another little interesting tidbit that's come out in the last week is the EDA stock reconciliation data. It's to the end of September 24, so it is quite a few months back, but a bit more butter and skim milk powder than previously thought. In fact, when you look at that chart, Steve, where we are now or where we were in September is pretty close to where we were 3 years ago, so about September 2021. But things have probably gotten a little bit tighter since these numbers were collated. Mm.
And we then turn that stocks result into an implied usage. We call it demand, but I guess it's disappearance, which shows during Q3, you see the build-up there on the right-hand side of that chart in those bars, that demand growth was picking up year on year to a bit over 3% through Q3 in 24. But that was before prices, the high prices had reached consumers. And while that wholesale line looks pretty steep through that period, not much of that had reached retail prices. We also, at the same time, keep a track on what's happening, and this is data out of Germany, comparing the panel data for brand and private label butter prices on shelf. And what I've done here is lag the wholesale price 3 months, try and get a comparison of what the retailer margin might be. Year on year, through the period July to September, prices were still lower, much lower than where they are now. But they were 40% up year on year. So that is pretty encouraging that demand continued, experience continued with that going on. But it could look quite different past that. Retail prices pushed 15% higher in October in 1 month. You see a big lift there, but haven't moved since. So it's going to be interesting to see whether, now that wholesale prices are starting to fall, whether retailers push a bit further onto shelves, but they have reached very tight margins, historically tight over the wholesale cost. So will they push more through? I think that's an interesting part. Certainly in the data that we've seen elsewhere, the private label gain in market share has been quite large. So there's a lot of trading down. So certainly people are saving more by shifting across to private label. Just whether the whole category can sustain volumes, I would say it's unlikely with those high prices up there for a period of time.
It's a bit interesting though, Steve, looking at those lines, brand and private label aren't that far apart
No,
in terms of retail price.
I think it's suggesting there's some pretty heavy discounting of brands to keep pace.
Mm.
And you see, last time we were here, 2 years ago, we stayed here for quite a while.
Yes.
That's it's through the year-end period. That's also interesting to see whether that holds. But we've been here before.
Mm-hmm.
And now China, Joe, bit of a look at new data there.
Yeah, we've got an update on estimated milk output and processing volumes. And you can just see that orange line is milk production, trending fairly significantly down now, Steve. And we've been hearing about the falling production and the really shocking margins or lack of margin that farmers in China are facing. So that's not a surprise. Liquid milk processing, Steve, still well down. We've had the second month of reductions there in this latest lot of data.
So what we do with this is then look at what does it mean for manufacturing volumes, and rather than go through a whole lot of charts on that, we come to the one that matters. What's the stocks to use look like in whole milk powder, and what does that tell us about where this might go from here? So the data, or ANIC data, is up to October. So I think we've used this before. It just shows the implied stock to use is back to normal.
Pre-COVID.
What we call normal is anything before 2020.
Yeah.
So it's back to the sorts of levels of carry that were there before a lift at the end of the year. And back in 2019, we still had tariffs and a window. So therefore, that was that ramping. But now we've got that, everything is much lower, lower demand, lower production, lower trade. But we should see a rebuild, which we think is underway with the stronger exports to China in October out of New Zealand. China's import data will drop shortly today, but say the same story, I'd say. We are seeing a rebuild, certainly through GDT as well, but anything more than a restocking seems unlikely with the weak demand side. So we should talk about the stimulus.
There's hope, Steve. Stimulus. Again, we're talking about the Chinese government announcing with a lot of hand waving, in your opinion, that there is another round of stimulus and some strong statements about what they're going to do in terms of getting the economy moving. So what did they promise, Steve?
So they promised to ease monetary policy next year. And I've talked about this for a while, but this is, allegedly a very serious move to change monetary policy. They're going to change the policy stance to be appropriately loose, as they call it, which is an interesting term. So, they've been easing this sometime, pushing out greater lending, and lending, certainly in the latest data, picked up substantially month to month. But this is still below what banks lent in a year ago. So the activity's still subdued.
Yes.
They've also promised to increase subsidies, add more of those vouchers. So what's going on, Joe?
Well, it seems like this is getting ahead of the outcome of the US election and what might be coming in terms of tariff and a bit more of a trade war. They're expecting to counter some of the slowing activity that might bring about. And November imports suggest that demand is still really sluggish. So just another attempt to sort of get people a bit more confident, get the economy moving a little bit. But the big question is, will it be any more successful than the other attempts?
Yeah. Chart of the week, Joe. How are you going to wrap this up?
Well, we're going across to the US, Steve, and just having a look at the US export data. We had data for October that's just dropped, and US exports were 4.3% higher in milk solids equivalent terms, and that's really down to Mexico and China. Mexico way out in front, but also China contributing substantially to that growth. Southeast Asia was the weakest importing region for the US. Cheese was up 13% in October, up 16% in the last 6 months, which would be encouraging for US manufacturers with all this cheese coming out. Mostly into Mexico again, and also Australia. Some of our importers jumping on some of the opportunity with low barrel prices. Butter was 22% stronger, but very small volumes, only 440 tonnes involved there. A strong increase in Chinese WBC 80 demand that we're seeing in these numbers. So some interesting trends there, and interesting again in the context of the US election and the kind of policies that the Trump administration is talking about, that it's all about Mexico and China, which are targets, of course, for some fairly stiff tariff action if Trump makes good on his promises.
Yeah,
Interesting to watch.
it will be. Okay. Well, that's all from us. We'll be back again next week. Thanks for watching.